In today's video, I'm going to show you guys a very simple way that we can use standard deviation to identify reversals throughout our day. And then on top of that, for the entries, I'm going to be using an indicator that we are selling in our Discord. It is called the Markov indicator. And this indicator includes risk management parameters, pivot identification, momentum filtering, money flow index filtering, and it has a few more features as well. If you guys want more information about this indicator, please go to the link down below, which is going to go to our Discord, and I'll chat with you guys there. Okay, let's start this video by removing our Markov indicator and identifying that we have 6 profiles that are marked out in this 24 hours. In this 24 hours, there's only one profile that I'm going to be looking at specifically for the standard deviation in this video, and that is going to be our 1800 standard deviation that we can draw out. So we have an MCR range that is going to be 1 hour long, specifically in the 1800 profile. That's going to be from 1800 till 1900. And this profile's high and low, we're going to draw out a standard deviation. And we can clearly see price reacting off of 4 standard deviation and then traveling to that same opposite standard deviation of 4 standard of that MCR range of the 1800. Price reversed all the way back to that same opposite standard of 4. And then in between these 2 standard deviations, we had price reversing off of 2 standard deviation. Once we went back into premium, we had price reversing off of 1 standard deviation. We're going to be using these standard deviations for means of reversal. But how can we add something to our trading without trying to think about what we should be doing, and just by using an indicator? So let's add this to our chart, and we're going to run a replay back to this bar where we can see price coming to the 4 standard deviation. We're also going to be looking at this momentum indicator at the bottom, which is going to be showing us the money flow, which is going to be in the red right now. So we have sellers stepping into the market, and then we can also see that we are overbought. So we're overbought, we have sellers stepping into the market, we're coming up to 4 standard deviation. Now we're just going to be waiting for an indication from our indicator with a stop loss, and then we're just going to be trading. So we see price creating a large wick on 4 standard deviation. So that's the first sign of rejection. Here we can see the indicator giving us a selling indication. So let's go in for that sell. Stops at that stop loss level. And then you can trade till your MCR high, you can trade till the MCR low, or you can try and trade to the corresponding standard deviation. That would be 4. But that's a bit too risky, so we're just going to do it to the top of that MCR. Let's play price on, see if we get another entry. Here we can see the indicator trying to give us a sign to sell, but that next candle takes it out. So it's a 2 candle setup. So we're going to wait until we get an indication. Here we have an indication of a sell. I'm going to put my stops there, and then I'm going to target actually just the top of that. I'm kind of afraid that we have this larger wick at the bottom, which is acting as a profile edge. So let's just actually do that. Okay, yeah, we could have went deeper, but it's okay. I think that's the only signs we had for this day specifically. So let's go to the next day. Okay, we can see in this next day, which is going to be the Tuesday, we do not have any signals from the Markov indicator. So I'm not going to go into replay for this one, but I'm going to show you guys still by drawing out the 1800 standard deviation, how price reacts to it throughout the rest of this day. So even if you're not using an indicator, there's multiple ways that you can trade this. I mean, if you're sitting here doing profile edges, that's a profile edge that failed to close below. We're closing above. Here we have a confirmation above this MCR of that profile. reacting on top of the standard deviation, like one standard deviation of the 1800. So this is a really good indication that price is just going to react off of that one standard and just continue. Same way here, one standard, and just continue. So let's go to a day where we get another signal from this Markov indicator, which is actually going to be the Wednesday. So let's do that by drawing out our 1800 again. And let's go to price reacting off of standard deviation. So we have price coming up to the 0.5 standard deviation of our 1800. We can see we had our previous low marked out, but we never had a signal on our wave indicator, a momentum indicator. We'll see when we went in for sells, we had the momentum indicator. And then when we went in again, we had the momentum indicator following on that next candle. So we're going to be waiting for the momentum indicator to indicate a buy for us with combination to that previous low. So here we have price creating another wick on standard deviation. So now we can anticipate a buy. We are completely oversold. The buyers have stepped in the money flow. Right here, we have a previous low with a buy indication. Here we get our dot at the bottom by the wave. So we can go in for a buy. Put my stops right here. And then I'm going to target the low or the nano range, which is going to be pretty much holding up the support and resistance for this 1800 line of the day. Because we're always going to be trying to trade towards this 1800 open of the day. Here we are confirming above this coil profile's MCR. Here we can see price reacting off of this wick that we created on 0.5 standard deviation. Remember, every single wick that we create on the standard deviation becomes a new act of like fortification for that zone. So we're taken out. Let's wait for another signal that we get, and then we're just going to trade towards this 1800 range again. We saw price trying to create more signals right here, but the next following candle kept on taking it out. We still haven't had any selling signals from the wave indicator, but we do have the sellers coming into the market and it also being overbought right now. Here we see we have the selling indication, the previous high with a stop, and then we have the selling indication on the momentum indicator as well. It's going to be a pretty wide stop. And then we're going to take it to make it comparable. We're actually going to take it. What's this? The one standard to one standard. So we're only taking it to the corresponding standard deviation where price is reversing right now. We're just building on top of this profile edge that we have from New York AM. There we go. We can definitely see that this 1800 profile is a little bit larger than most of the other 1800s. So we're not going to specifically be trading the standard deviation that we're going to be getting from this if we're outside of it. But a very simple way that we can be trading standard deviation still is by trading the MCR itself. So if we have a situation like this specific day where the 1800 was massive, we could have the standard deviation drawn out from the MCR created at the start of this profile. So the first 22 minutes, and then we can wait for the Markov indicator. Here we can see we are overbought. We can see that the money flows in the reds. We have sellers. When this indication for a sell came through, we have this momentum indicator giving us our dot. And then we can also see that we're reacting off of our standard deviation. So then in this case, you would probably just be trading to that same MCR. If you guys want more information about this indicator, please go and click on that link down below. It will take you to our Discord and you can ask us any questions about it, how to acquire it, and what it does. This has been Zero. Thank you so much for watching. Please leave a like and subscribe for more videos like this, and I'll catch you guys pretty soon.